So this section is going to focus on identifying what type of market you're in, right? So let's think of it like this, like the institutional bid, the institutions out there, the big money, right? Not the wholesale market movers, but the institutions. Like they don't trade in the Wild West with huge ranges and gaps on short positions. They trade in balanced areas that have supply and demand and follow through buying and selling. They aren't in the market right now, and that's because there isn't enough liquidity to operate in it for them because of the lack of supply. All right, so the market no longer runs on a commission-based model, right? But it runs on an asset gathering model, right? This means institutions get paid a percentage of assets that they own. Which means if they own 1 million shares of Apple, like why would they sell them right now when they can hold on to the supply of Apple and wait as long as they want? Institutions are way too smart to buy their assets at the all-time highs, at high prices that we're facing right now. Because of this, we are in a thin, wholesale-dominated market ran by momentum, size, and wholesale traders, right? And this creates huge range and gaps due to short positions. Why? Because every time the market starts to fall lower, instead of covering, people start shorting positions. If people stop shorting positions at the lows, this wouldn't happen, and wholesale wouldn't have the shorts leverage to take the market higher. Wholesale is standing on the back of short positions currently. And when these people short at the lows, they are selling their position to wholesale, which is buying. And we know the model is designed for wholesale not to lose money, right? Wall Street is a one-street town where money flows in and not out. So when the market goes lower and people short the markets at the low, they get trapped and the market will go higher because large short positions will not accept defeat and close their losing trades. Instead, they stay in, keeping the supply all to themselves in these losing short positions that they are in. As these losing shorts stay in their positions, their whole margin credit for the position belongs more and more to wholesale. And wholesale gets more and more the margin of the short position the higher they take the market up. The shorts, so when the short positions can't handle the squeeze of the leverage anymore, they close their position and wholesale keeps the profit, right? Supply opens back up in the market, allowing the price to move down to the initial short position price to be swallowed back up. Like, why would the market trade normally in this kind of condition? Right? So as you go forward, trade, focus, and concentrate on one market while learning. Like study the business model and understand the order flow when studying the charts. A brain surgeon doesn't try to fill a cavity while they're drilling in your head, right? Supply is everything in trading. No supply, you go long. If there is supply, you go short until it turns off, right? Don't focus too much on demand, but focus on the supply, right? Because once supply runs out, you will have demand. The people who bought the supply, like when supply runs out, like when they bought the supply, they bought it with the intentions to take it higher and sell it, right? So when supply runs out at a level, this means it was mechanical selling that shut it off, right? Why? Because someone bought all of the supply, opened orders to push the market up to sell, and this is the model in a wholesale dominated market, right? So supply can be shut off at any time, right? Remember, the wholesale model in a market that they dominate is buy inventory cheap and sell it to you higher when they run out of orders to sell you, but the orders are still coming in from the order flow. They short to you, and then they take the market down to buy it back cheaper, And we see this market when there's no supply, no follow through with buying or selling, right? So wholesale takes, in this kind of market, they take counter retail responsive trades, right? Buy it cheap, mark up the price, and hold the market up to sell. False buying from a seller, they do false buying, right? From a seller's position to attract and convince actual buyers that that price is the fair value to buy at. And if it works, they sell and offload their inventory to the buyers, right? This is known as a stop run, right? As an example of it, right? They do fake buying to attract real buying to create follow through to buy higher. Example, right? So they can't get enough buyers at the moment to buy their inventory. And they know that they have to get rid of their inventory. The bosses told them, the farm said, get rid of this many shares, So what they do, wholesale will rip the price above previous day's high, right? And retail will say, hey, it is above yesterday's high. Time to buy the trend. While wholesale is in the corner saying, yeah, come on, little fella, take my orders, right? So let's do a recap of this lesson, right? Wholesale is holding the market up if there is no supply anywhere near the price of the short position. It is simple and common sense. Like, you have to think of it like this. Break it down at a common sense way of thinking, right? If you sell something you don't own and the price goes higher, then you're opening your position for you're losing money, right? Especially if what you are selling that you don't own, but then if no one else is selling for you to buy, like, you lose, right? So what I'm saying is, like, if you shorted a position and there's nobody else that are shorting positions and you are fighting the trend, which is up, and like not taking your losses, then like price is never going to return back to you. Cut your loss. You're a trap trader. All right. So I think of it like this, and it doesn't line up exactly, but this is the way I think of it, right? I take somebody's money to build a house, but in the back of my mind, I know I don't know how to build a house, or there's a lumber shortage, and I know that I have intel that says lumber won't be available for 5 more years, right? So I'm going to give the money back with fees the longer it takes me to confess the people that gave me the money that I don't know how to build a house, or I don't have the material to build this house. So hopefully this helps. This is the walk phase of this section. So hopefully that broke it down good for you guys. All right, guys. Later.